Okay, Hesh Sagafi here, and what are we going to talk about today? Did the Federal Reserve pivot from their position of we've got to end inflation and jam interest rates higher? Well, it's December 2022 right now when I'm doing this video. The fact is this whole year the Fed has moved the Fed funds rate 75 basis points, which was a lot. That was a lot over the last 30 years from where it was at. So they've moved that index a lot this whole year. And the question is when do they start slowing it down? When they start slowing it down, that's when the pivot happens. Well, let's answer this question first. Why? Why would they slow down how fast they're raising rates? Simple. They're slowing it down because what that tells you is that they believe they've made the moves they have to make to have the effect on inflation that we need to have done on inflation. So the fact is raising the rates, which they raise the Fed funds rate, raising that index, it doesn't have an immediate effect. It takes a little bit of time to go through the system. So the fact is they're going to start slowing that increase down when they believe they want to watch and observe of what's going to happen to inflation as inflation moves along. So that's why here in December, instead of 75 basis points, they went up 50. That's the Fed pivot. That's the turn. I can't say it is. It doesn't mean they're done raising rates. The word on the street still is, come the February meeting, which is really January 31st and February 1st, come that meeting, are they going to only bump it 25 basis points? Who knows? Maybe they go 50, maybe they go back to 75. The truth is right now, the money betting is on 25 basis points. The next meeting comes in March. Is that one at 0? That means they're done raising for right now. So the truth is, did the Fed pivot? I can't say they did. They definitely slowed it down. This is, I can't say good news. Ultimately, it does tell you they think inflation's starting to hedge a little bit. But like I always tell people, getting inflation down is like going on a diet. Anybody who's ever been on a diet knows that when you first go onto a diet, what happens? You drop 10 pounds like that quick. You're like, oh my God, this is incredible. Then all of a sudden, you hit a plateau. And it's like, wait a second. I'm not losing as much weight as fast anymore. Well, you have to tighten the diet up a little bit more or a lot more to even see half of the loss in weight that you saw initially. Suddenly, everything starts becoming harder and everything starts becoming slower. I've said this on videos before when we talk about inflation. The latest inflation rate was at 7.1%. That's the latest report data that we have out there. Inflation's at 7.1%. Well, what the hell does that mean? Everyone's always like, well, what does it mean when it's 7%? Here's what it means. It means that if you have $100 today, whatever that buys you, which ain't much, in 1 year from now, you need to have $107 to buy the exact same things that $100 buys you today. Here's the problem. The federal funds rate, which a lot of interest rates are based on, is at 4.5% right now. So if you have $100 today and invest that money at a 4.5% interest rate, in 12 months from now, you have $104.50. Now look at this. You have $100 today invested, and you have $100 that you spent. You're at even. Because of inflation, in 1 year, you need $107. You only have $104.50. So right now, you're $2.50 behind the curve. So as you could see, you lost some ground. You're going to sit here and say, my money does not buy me as much as it used to. Here's the problem with 7% inflation rate. Here's the problem with a 6%, a 5%, a 4% inflation rate, okay? This is the problem with it, is that over an extended period of time, it's too great. And the distance between the inflation rate and the interest you can earn and make starts becoming so wide that the next thing you know, in 5 years from now, you're going to need $150 to buy what $100 bought you. And with investing that $100, instead of being at 104, you're probably at $120. So instead of the gap being a $2 gap, now the gap is a $20 gap. And it just keeps getting wider and wider and wider like a canyon. That is why inflation must be dealt with. So the Fed is definitely lessening or loosening up in their position. That's the pivot. I can't say it's a full pivot right now, but it's definitely a change of what they've been saying and what they've been doing. Keep paying attention to it. The next meetings, when it comes to interest rates, are the February meeting, the March meeting, the May meeting, and then it goes from there. Pay attention to unemployment. Pay attention to the recession. But as far as the Fed pivoting, definitely they've made some moves, and those are big statements to make. So as far as all of that goes, keep following my videos, watch more. That's what the Fed pivot is about. That's what this video is about today. So I'm always trying to educate you and keep you in front of the news. Subscribe to my page. I need as much help as I can get. Share this page with your friends. Feel free to comment, of course, and keep following my next videos, and we'll see you on the upcoming ones.